Thank you for tuning into On Point and Aditya Birla Sun Life Mutual Fund initiative. In today's podcast, we will be discussing what's changed globally, the money markets and the equity market outlook, and the real pro that has come out of in the last 6 months, which is the rise of retail investor. To give us insights into all of this, we have the Managing Director and CEO, Mr. Balasubramanian, joining us today. Now, sir, it's that time of the year when everyone gears up for festivities, and if the recently concluded festivals of Ganesh Mahotsav, Navratri, and Dashera was any indication, we could see heightened enthusiasm for other events. What are your thoughts on celebrating festivals back in person and not virtually?
Thanks, Jayesh, for asking this question at the beginning of the festival season. I am a firm believer, I think post-pandemic getting over and the economy getting opened up, there's one segment of the business that will pick up, which is the celebration of the festive season that is coming in the country. I think we'll have series of festival season coming in, and the last 2 years there was a muted celebration that happened in every family, in every household. I see this becoming now coming back to normal. Therefore, the festival season will bring in more joy, as well as more spending, as well as drive the economic growth to the next level.
Let me get straight to the financial markets then, and let's also highlight what has changed from the previous quarter. Geopolitical tensions continue to, be the overhang for the markets. However, there has been cool off in commodities as well as oil prices. What has not changed during the quarter is the fear of recession that is looming large, along with the rise in inflation and the interest rates. As we step into this festive quarter, what's your outlook on global economy?
See, global economy, I think from last quarter to the September quarter ending, it only further worsened from the point of view of inflation remaining sticky, and interest rate continues to rise. Equity market volatility in the global market remain high, and though commodity prices come off for a variety of reasons, but the expectation of recession setting in the global market had gone up. But having seen this in the global market, and the flows in general in the market globally, including India from foreign investors, got reduced, that I think I would probably assume on the back of the allocation which moved towards equity to the fixed income also happened in the same period. The way I see is this is now become a new normal, and the global economies, whether it is US, Europe, even China for that matter, Russia, continue to have its own struggle, and this will keep the volatility in the equity market globally high. At the same time, they'll also make policymakers to remain more alert and continue to take all the possible decisions which will actually bring down the inflation under control and keep the growth back up.
The major concern today has been the aggressive rate hikes that has been undertaken by the Federal Reserve. Now, the dot plot is suggesting another 100 to 125 basis points for the remaining two meetings of 2022. That is not to forget that we've already had about three consecutive hikes of 75 basis points each. Now, the commentary during Jackson Hole was also not inspiring. How do you suppose that the Fed will tackle the inflation issue going forward?
So I think they have made it very clear that till such time inflation is brought under control, the rates hike cycle will not stop, which essentially means the market is now building up an expectation there will be another 70 basis points rate hike, which will eventually take the terminal rate to 4.5 or 4.65 in US. That is already a stated policy. That means the market is already getting prepared for subsequent rate hikes in the coming policies. At the same time, the market also have been correcting on the back of this news, which I would assume that market would have discounted most of the stuff that's likely to come in the forthcoming policies. And some bit always remain not discounted by the market for a variety of unknown reasons. At the end of the day, everyone has to accept the policymakers can also surprise on both the sides.
And back home, the RBI has done a rather well job in maintaining growth versus inflation. How do you suppose that the RBI will approach the rest of the year in terms of the interest rate hikes? Not to forget that the rupee has now constantly been above the 80 mark.
So I think that the Reserve Bank of India has managed the whole thing quite seamlessly. Despite the rate high cycle is quite aggressive in the developed market, India has been relatively moderate. Of course, from Indian standard point of view, they continue to remain aggressive. Second, India's resilience, especially on the inflation, is far superior to developed market. The bond yields movements are far superior in developed market, in bond market. But our rupee is something, while Reserve Bank of India did a very good job, I think beyond a point on a currency adjusted basis, where should the rupee trade? That's something RBI has realized it a little ahead of time instead of having the same discussions down the line 2-3 months. They have let rupee to depreciate to be in line with the global market. While one can argue that rupee dollar has to depreciate further, if one has to take into account dollar index, the way they are behaving. But however, I think RBI has been quite conscious of the fact that we cannot remain disconnected from the global economy too much from policy making point of view. At the same time, there is also need for paying attention to the revival of economic growth in India.
Let's also shift focus towards the Indian equity markets that have been outperforming global peers in recent times. The talk of decoupling is only getting louder. It almost sounds like 2007 and 8 once again, and we all know how that episode ended. Do you believe that we will revisit the recent low that was hit not only by global markets but Indian markets as well? Or are you in the camp which believes that India has now truly decoupled from the developed world?
See, India is, of course, getting better, we can say. So, decoupling is very difficult to say. At the end of the day, India will remain part of the global economy. And money is fungible. Therefore, India also depends on foreign flows. So, therefore, it's not fair to assume that India is decoupled. At the same time, India is decoupled in the sense from the rest of the global economy. The growth aspect of India being met out of domestic consumption, domestic spending, and also the stable inflation, good monsoon having impact on the retail growth in the country. All of them remain extremely resilient. Second is the policy making of the government continues to keep the reforms, how they can actually act as a differentiator in the economy compared to the global market also remains a strong force for India. To the extent we can expect India to be an outperforming market. At the same time, we also keep in mind that beyond a point, because of here our performance, if India becomes costly in terms of relative basis, we must also keep in mind that high valuations may also come in the way of taking the equity market to some extent in either flat or to the marginal upside kind of scenario. That's something one has to just keep in mind.
And one final question. Amongst all the market participants that are there, the retail investor has emerged as the pro, especially in the post-COVID world. How should one adopt the pro-investing approach in their investments?
So definitely from investors' point of view, he has to see this volatility, uncertainty is something as a friend rather than getting worried about it, because at the end of the day, market in the long run tend to perform better than what we perceive. And any investment that one makes in mutual funds or in equity, which is, we call it of course the pro investing or the pro portfolio creations, staying invested in equity through a mix of large cap, flexi cap and balance advantage fund would remain key in the form of creating a core equity portfolio to generate wealth for the long term. Second is SIP way of investing will remain key to the success. Given the fact the market will always go up and down, I think what remains permanent is the goal, the purpose, and for which you have to make the investment.
Thank you so much, Mr. Balasubramanian, for taking out time and highlighting your thoughts on India as well as the global backdrop. As for you viewers, happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।